The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. One more time into the breach, dear friends. We are up 20 points on the S&P cash, 2120, 2.2 billion shares. So volume a little bit better, but not anywhere where we can say that we're going to reach escape velocity in this market. I think everybody had a little time to sleep over what the Fed said. And, of course, when they talk out of both sides of their mouths, as the FOMC seems like it only can, 9/10 of everybody wants to raise rates. And apparently Janet Yellen is saying that we're not going to do so until we get data that says so. Everybody's willing to go with the two that are not thinking about raising rates this fall. Fed fund rates still pretty much telling us that 98% chance we get this. But to me, it is the equivalent of Independence Day, where everybody just kept lying to the public about the aliens not being around. Even lied to the president about it so he could lie convincingly. But that Fed funds rate, I think, is telling us the truth. The question is just how much our injection are we getting because of the Greek deal, and that Greek deal failed. But to me, the idea is that at least for the moment, China's kind of pulling back, EU in trouble. Maybe people are going to rush one more time over here into the U.S. stock markets, hoping to get movement. But we haven't we haven't broken out of the highs out here. Certainly not doing anything that looks like a sign of strength. It is options expiration. Of course, they expire tomorrow. We're going to be talking about that. And I had a few people email me, and I think I have a good explanation of what I'm talking about and why I don't use the online systems for showing how expiration will work. And I'll explain why. And I've got a chart that I kicked out today on one of the stocks that we're playing for options expiration in the daily newsletter. So maybe I'll get a little bit of color for everybody on that. But at the moment, we're up 20 points. Could we pull back 5? Options last night basically said somewhere between 21 and 21.15. Could they get a little richer out here today and still stay within a statistical margin? I think the answer is yes. Do we have a great deal of volume? No. But we haven't had that up or down since we started. And, is this going to fall apart tomorrow? I suspect the answer is no to that. We're probably going to go right into options rollover on Monday and Tuesday, see a little volatility. And it's probably going to be Wednesday before we see a direction in this market. But normally, you get something like this, you get about 2 days or 3 days where you've got to have some kind of continuation move. That's the one thing we have not had, either on the downside or the upside. And for my daily newsletter, other than playing some expiration moves and options over the next day or so, I want to stay all cash and pretty nimble out here. We've got a couple of positions in the longer term newsletter, and both of those are doing okay. In fact, one of them's made a big signal. I suspect it's going to be going out of style with buggy whips, and we're short it in the Tech Insider. But what else can you say? If we really have a lot, I know we're up on the IWM, and everybody's blowing about that, thinking that as interest rates go up, that it will be, and basically maybe even in a recession, that these companies working in the United States and selling in the United States will do better than those with overseas issues. But of course, then we look at the dollar, and the dollar basically out here tried to break out the lows. It came close. Got to $93.56 on the current on the continuous contract. 94.07 right now. We're off about 23 cents. And again, this thing is extremely spongy. It continues to look like we've got big banks, the Feds, Treasuries, world bankers all trying to hammer the dollar down a little bit to keep it under that pain point. But I don't know. It's hard to see how even at 94, 95, things don't go well. Certainly saw gold kind of take off today. We've been talking about many of the individual stocks making, gold miners making lows with a light volume, but the energy on the way down was light. So maybe this is the first and only bounce you get. Maybe you get a few bounces out of here. I still would like to see this thing either go flat for a much longer and or blow out the bottom and scare a lot of people out before I move. If you are long, then great. Maybe I missed the boat on this one, but I still think that we've got an opportunity to see lower prices in gold before I would hop on board. But I do digress out here.
That it's all just a little bit of history repeating.
On this day in 1983, Applied Molecular Genetics, you may know them better as Amgen, goes public on the NASDAQ, selling 2.35 million shares at an initial price of $18. Of course, this has become one of the huge powerhouses, not just because of their initial bunch of ideas about making pharmaceuticals, but because of the enormous amount and huge amount of acquisitions they've made over time. They started off with Synergen, they bought Kinetics Pharma, Immunex Corporation, Telaarc, Abogenics, Avidia, Ellipsia, Elantos, Biovex, Laboratorio Cumano, Micromed, Mustafa Nafads, Kai Pharmaceuticals, Decode Genetics, Onyx Pharmaceuticals, and they'll probably buy 5 more things before I get done with this sentence. But on this day in 1983, the real start of the bio revolution, of course, we've got that biotech index up at those highs today, too. We'll take a look at that when we get into the charting part of the market. In the meantime, when news breaks, I'm here at TFNN to fix it. And today we saw the Eurozone close up a little bit in the UK, 0.4. Germany up 1%, a little more than that, 1.1. France was up 0.3%. When we go over to Asia, the Nikkei was off 1.1%. Shanghai really starting to pull back off of those lofty levels, off 3.6%. Hang Seng off just 0.2%. So we've got a lot of these high flyers over there starting to pull back a little bit. Very hard to play, though. Very hard. It's been 1,353 days since we've had our last market stock correction. Of course, as we always have to do now, talk about Greece. And in Greece, they're in the Greece. Basically, I think they came out with an announcement right at 2 that there was still no deal. I wish this Greece deal was a much better deal, kind of like Deal or No Deal on television. At least you had some great models standing there looking pretty. We don't have a whole lot there. We just have Mr. Varoufakis. And we've been talking about some ideas with Andy Heck. Kind of interesting, too. I saw an article yesterday or the day before. I emailed it to him, but there was a mini riot in the UK when the Walmart of the UK had a sale on meat. All I could think was, Soylent Green is people! People are Soylent Green! Oh, anyway, I love that movie. Nobody's got a really rosy picture of the future in movies. Guess it probably wouldn't make a very good movie if it was all Pollyanna. It's always got to be Soylent Green as people. Kind of the end of the world stuff. Anyway, BioMarin Pharmaceuticals announced a positive result of phase 2 proof of concept and dose finding studies. If you're not familiar with what they were working with, it's achondroplasia, which is a common cause of dwarfism. It occurs as sporadic mutations in approximately 80% of the cases, but basically it is dwarfism. And other than that guy on Game of Thrones, I don't think anybody really is looking at it. I guess there's a whole bunch of little people shows on the Learning Channel, which I haven't watched in forever because it's got nothing to do with learning anymore. Kind of like the History Channel. When's the last time anything that actually had real history on it was on the History Channel? You'd think that it would be, they'd change their name or something, but haven't. Discovery Channel, pretty interesting. Of course, Ancient Aliens does not qualify as history when they basically Photoshop a bunch of aliens standing in the background of every photo. That's just bovine excrement, made up stuff. Some people actually believe it. Of course, that guy is nuttier than a fruitcake. The one that with the curly hair that's always on it on the Alien. What is it? Ancient Alien show. But, I've wandered away yet again. Oracle, of course, was off almost 7% this morning. Missed its Q4 estimates by 8 cents. Missed on revenues. Issued guidance below consensus going forward. And I don't know why everybody's surprised, because I bring this up probably once a month, and that is when there's a new CEO, they throw everything in the kitchen sink into earnings to get it all out and in the open. And of course, the ex-CEO is still hanging around, but for the most part, you've got a new CFO/CEO and a new CEO at Oracle, dueling CEOs, one working on just accounting because the company's so big. And boy, didn't she have the best name in the world. Safra Katz. It could either be one word or two words. Safra Katz. It's Safra Katz. You got to give a big pause. But I love names like that can either be one or two syllables, and you got to go, Safra Katz. No, Safra Katz. That's what I said, Safra Katz. Who's on first? Anyway, it's beyond me that anybody thought that anything different was going to happen with Oracle. Every time you see a company change CEOs, they wash the books clean to make it look better for them in the future. Normally happens at least 1 or 2 quarters. I don't see anything different here. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And welcome back.
I got mail. Yay! I got mail. Yay!
And Jamie from Green Bay is all squared away. He's one guy that's got it going because he knows how to address me. Yesterday, I announced that because I feel in my bones I'm the President of the United States, that you need to call me Mr. President. And since I live in the White House and also very delusional, I continue to think I'm the President. But since it's my house and it's white, that's all that matters. Anyway, says, Dear Mr. President, can I discontinue my Playboy magazine subscription since we will now have babes on the $10 bill? Please advise, Jamie from Green Bay. Thank you, Jamie from Green Bay. Yes, you know I will do what's right by you. And as a guy's guy, we will make sure that the $10 bill is pleasing. Other things that we have going on, we talked about Oracle out here. Safra Cats. It's one of those names that once I start saying, I can't quit saying. Safra Cats. Anyway, we've talked a lot about electric cars and in the future, and if there is something that's going to put the whammy on Tesla, it certainly could be the price of lithium for lithium-ion batteries. And Andy Heck, I see him listening, so maybe that'll be interesting. Tesla hasn't done a lot. It's up $1.44 today, but it was up big the day before. But very interesting that it looks like we've talked about it before, that if you really wanted to play battery-powered cars, you'd probably buy SQM, which is the chemical and mining company down there in Chile, where 80% of all the lithium comes from. But there are reports out now that the Chilean government will repeal all the mining leases and are going to take everything over. Maybe they're looking for a cartel on lithium. So keep a sharp eye out over the next week or two to see what happens in this vein. But I don't think you'd probably want to be in SQM if they get the axe. I probably needed to say something like SQM on the PDQ. Anyway, off 12% today. Pretty interesting, but keep an eye on that, because that could make lithium-ion batteries incredibly expensive if they start working on it. Of course, SQM would get out of their deals, and then the Chilean government may set any price it wants for the precious rare element metal. Oil States International off about 5% today. It lowered guidance for Q2 as well. Services and revenues were down, and I don't know what else you can say about any of these oil wells off the coast of the United States or the companies that go after them. But since the big oil spill out there, you know, other than them going after frackers again, which I think, I looked at the data and it looks rather ludicrous to think that fracking could actually cause an earthquake, or even minor earthquakes, or even extremely minor earthquakes. I've had a couple of emails about it during this week, and I had just actually read about it just before the show, at least the scientific data. And I'll look at it a little bit more, but I'm of the opinion right now that if I told you to basically chain a butterfly to a locomotive and it would pull it, that would probably be about the equivalent of whether or not fracking could cause an earthquake. Doesn't make me think that it's at all possible. The amount of forces that you would have to put out would be that. Basically, they're telling you a butterfly can pull a locomotive if they're telling you fracking can cause an earthquake. And that's it. Other way. What else do we have out there? Oh, wanted to get into this. I don't know if I have enough time, but we're going to get into options expiration the next day. I know everybody's interested in that. We'll show you a chart. But what I wanted to get to is why I use my specific charts, the way I wrote them, and why they are different than what you see on a lot of the Max Payne websites that basically just show you the crossover point and don't show you what's below it and why that is important. So hang on. I'm going to add this to the next webinar I do on it, because I really didn't explain this probably as well as I should have. And this is going to give, I think, everybody the idea of why we can see options movements that's maybe at least a good bet, if not a great bet, when we come back. In the meantime, you can give me a call at 877-927-4448. Anyway, give me a call.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, we're going to talk about options expiration. I don't see a whole lot in here before the end of the day. We're 2021 on the S&P cash up 20 points, 2.34 billion shares. So we'll be watching the volume in here, but we'll need to reach escape velocity in this market. We're probably going to need 3.5 to 3.8, maybe even 4.2 billion shares to break out of this trading range. So we're just in the upper part of this trading range, and I don't see a whole lot other than that. So we will see what happens. It'll probably be into next week before we see a change of this trend, either a breakout or another failure. We go back down to 2070. So we'll take a look at that. Anyway, we're talking about making plays on options expiration. We do it a lot, mostly because I've been doing it fairly extensively in my trading career. It is hard to do. You have to wait for the pitch to come down the center of the plate, that big hanging fastball, to put one over the fence. But I think I've got one this morning, and we talked about it in the newsletter right after the open. I said, okay, let's go after it. I had to actually buy it just a little higher than I wanted to, the option anyway. But I was hoping to get in it for a quarter. I think I ended up getting it at an average of 30 cents, and actually ended up buying some options at some different strike prices just because there weren't enough out there. But I had a nice little run out here. I think I'm going to make some nice coin Anyway, we were in a stock. We were pretty much buying them at the money, and it's up. It's up nice. So we're making money on the option. I'm hoping. Let me put it that way. I'm hoping for a 4 or 5 to 1. May get 3 to 1, 4 to 1 on it on a 1 day trade into tomorrow. But I wanted to show why I did it, both to my listeners and also to people that really are not understanding why why the charts I use are a little bit different. But here's a great example of it, and I didn't think to really get into it or explain it, I think, in previous things that I've done, but it is a good example. And what I'm showing on Tiger TV and in the Den is the options curve for expiration. Now, this looks like a big X out here. And if you're using what the web normally shows for Max Payne, basically all you're seeing is the center point and everything above that center point. You're not seeing what is down below. And why that is important is over on the right-hand side of this chart. And what you're going to see is that the amount of money that would be basically lost is flat up to about $22. But on the put side, basically you've got the money coming down. So on the opposite side of this, no matter how much the stock moves, basically one side is going to outweigh the other side. So if you're an option market maker, you've got it. If anywhere above $29, it doesn't matter. You're going to win. You locked in your profits last Wednesday. That's it. You went delta neutral. It doesn't matter what happens. Now, what is different over on this side is that this $20 stock could go to $22, and the amount of money in the calls would not change a bit, but it would change the amount of money in the puts by probably $50 or $75 million. And that asymmetrical part of the curve is what I'm looking at for this move. Now, at the point that it starts to get to about $22, again, for the option market maker, it's a draw. So they don't care. But what they would like to do, and normally what will happen, is to make the most amount of money to be lost, it would go to about $22. And it's kind of hard to figure out because I know everybody has looked at the Max Payne sites. What they don't show you is this bottom part of the curve, and why I wanted to show it. If we looked at IBM, we probably will here today. What you'll see is it really doesn't matter. If it goes up, a quarter or a dime, will they make a little bit more money? Yeah. It's probably going to expire. IBM is probably going to expire right where the most amount of money is lost. But if the option market makers did their business, it doesn't matter. So they'll lose a little bit more money on one side, either the puts or the calls. They get that money back on the other side, and it does not matter. Where it does matter is where they don't have that side. The stock coming into yesterday was $20 that we're playing. If they move it up to $22, all that happens is all that money in the puts goes to money heaven up to $22. Above that, the option market makers could care less. So what I really like on this particular chart is there is a symmetry. That is that the puts are not weighed against what's out there in the calls, and that's going to make all the difference in the world, I think, to my trade. And I wanted this thing to move $1.50 on 30-cent puts. That's going to give me about a 5 to 1. Even if it goes, maybe it'll go above it. We also have a lot of energy in this particular stock because guess what? It's got a 40% short interest rate on it. So when you put the whole thing together, it's not one single thing, but it is great when we find a stock that is tested a previous low on much lighter volume. Then you find out it's got 40% short interest. Then you find out the options also give you a definitive edge, and that is it. We haven't been able to play any, I think, for 2 months back here, and this one I picked out today in the morning. I'm going to be looking for more of these tomorrow to see if there is anything out there. But my guess is that we'll see the stock and we'll talk about it tomorrow during the show, will come right up to $22, and that's why I'll be blowing out my options if I have an opportunity to do so. But above that, there's not a lot of reason for an option market maker to move it up. And again, just as much money that will be made on calls will be offset on those on puts. So there isn't a big deal. Now, the bias is always probably to the center point, but especially on the right-hand side of this chart above 29, you can see how symmetrical both the puts and the call money is. For every dollar that this thing goes higher, basically the money comes right out of the put side, and that's all that anybody cares about as an option market makers. They have locked in their profits. It's not going to change. When you see this or these really bizarre kind of looking patterns on the right-hand side of the chart, this is where you can see some profit and where the wisdom of crowds really starts to speak. So anyway, if you have any questions about options and options expiration, give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can post a message in the den, which I am monitoring at this time. So keep an eye out on it. And I think that's it. So we're going to get right to charts. And we'll take a quick look at here. I guess we did say I'll bring it up. So let me, do I have it up? No, I do not. Let me bring my little options machine up here to take a look at it. But this is kind of what we have set up here in the SP, the SPYs. And when we look, where's the SP? SPY 21, 212, 212. You know, you don't really see that much difference out here. You're pretty much in the statistical high end of this at 2012. So am I looking for any higher? No. Could we pull back 10 points in the S&P tomorrow? I'm thinking that there's the possibility of that. I don't see a lot of shorts or short energy in this. If we do start getting and stacking up a whole lot more volume, maybe we could get a lot. But I'm kind of looking for us, or at least let me put it this way. Options are suggesting that we expire tomorrow at 21.15, maybe 21.10. And that would be well within the statistical inference out here for the very low amount of shorts we have in this market at the time. A few stocks with huge short interest, but most of these and most of the market out here does not have a lot of people betting for the market to go lower. So there's not an easy short squeeze other than what we saw out here earlier this morning. In the meantime, we're going to get going. Crude did pop up a little bit, $60.80, still in this just to the upper part of this trading range that I think goes back to 55 to 53. We also are looking at gold, which had a nice pop today, $25, 1202 as we speak. We were talking about it the last couple of days. I just wish it would have gone sideways for a few more days before it popped back up, and maybe gained a little bit more energy, and maybe was able to get a little bit bigger move out here. Are we just going back into the upper range of a lot of trading range in this? I don't know. I haven't had a chance to look at the energy in that. When I look at the GLD, I wanted to see a great deal of volume out here. We got about 5 million shares. And when we look at that in the context, GLD, well, I've got something. Oh, that's why. Let me turn that off for a second. You know, is 5 million shares a great deal out here? No, you've got 11 million shares back up on May 18th. Maybe we're headed back up to test that one more time. But does that infer that we're going to break out of that trading range? It's kind of tough to say that at the moment. I would have liked to see a lot more energy, at least in the GLD. We'll have to see how the gold contracts come out at the end of the day. Probably, I guess, tomorrow. Other things out here. Okay. Okay. Let's look at some other stocks out here that we've been watching for a while. We talked about some of these oil stocks looking like they were ready to bounce. We got a little bit of more continuation in BHP, but again, these oil stocks aren't getting much love out here. A little pop in BHP today. It hasn't filled this gap where it gapped down on, what is that, the 4th? Let's zoom in here a little bit and actually zoom out a little bit. You know, you've got 3 gaps in this thing, and I've always wondered whether or not there's enough of a, you know, you basically had this last one was split, but you've got some nice room back up in here. Could this thing get back up and be a 3-gap play? The answer is yes. I just don't see any energy out here now. I'd kind of like this thing to come back down, test on light volume, and then maybe it would be ready to run and fill those 3 gaps up to $51.25. Other stocks of interest out here, the BIS. This one's breaking down and it's got volume. So you're basically going through the March 20th low, $29.18. Had a lot of volume that day with 1 million shares. And going through that today with 950,000 already, I think you can assume that we're going to have 1 million shares in this. And just so, let me read you the profile. It is 2 times the inverse of the NASDAQ Biotech Index. So are we getting a breakout? Be interesting. BIBB. We're certainly not doing it with a sign of strength. When we actually look at the IBB itself, we needed 3.3 million shares to go through the March 20th high, 374.94. Again, 3.3 million shares. We're into it with 1.8 million shares today, and just not a lot of energy. Now, does that mean it could continue? It probably could. I just don't see a lot of upside right now. Barnes & Noble. Someone's got to call in and explain to me how this bookstore that's barely open is taking a big run off these lows. Now, I can see, you know, maybe it basing out, but there's something going on in this. Could they be bought out? Is there something else going on? Is there something I don't know about? Well, I'll tell you one thing. It's going up against its previous high on February 26th that had 2.7 million shares. And guess what? Yesterday it had 663,000 shares. Today, 400,000 shares. I don't know if this is the last death rattle in this stock, BKS, but doesn't say a lot to me. Hopefully it's not one of these land bank things again where everybody's telling everybody how much the real estate is worth. John Malone? Maybe I don't know about that. But I do digress. Other stocks of interest trying to break out, didn't quite make it. Commerce Bank shares. CBSH is the symbol on this one. It's been bouncing against this $47 range. It's had as much as 900,000 shares yesterday. It did a little prairie dog and stuck its head out, went right back into the hole, and kind of going a little sideways out here today. The reason I saw that, was interested in it, was just looking at the people yelling and screaming about how you should be buying financials. You got to buy financials. You better buy financials today. And I keep looking at this Gartley pattern, which looks awful, awful good in Bank of America. And I don't see it. This energy has been poor since April 1st when they got.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, a few more stocks to look at. But got Tom O'Brien for the next 2 hours. He'll be calling the volume into the close, which I think is going to be very important. Again, I just don't see a lot of juice here today. We've got maybe 1 or 2 more days for volume to come in and get a sign of strength. If not, we're just at the top end of a trading range, and that is it. So what we're looking for is some kind of sign of breaking out or just doing what we've done, which is try to tap out the bottom, can't do that. Go try to tap out the top, can't do that. Go try to tap out the bottom, can't do that. And I don't see anything in the energy here in the last few days to really say anything other than we've got a modicum of shorts that are exiting the market, but nobody wanting to really buy much higher. Volumes still, well, when we look at the volume right now, 2122 on the S&P cash, 2.48 billion shares on the New York Consolidated Tape. Again, I think we need about 3.8, 4.5 billion shares to get a sign of strength out here in the top. Now, maybe we get that, in which case I'll buy the retracement on this. But to this point, there is no sign of strength in this market. And I'm seeing some blow-off tops in some stocks, just like we've seen in the past when these things got up to highs and then could not move. So I will continue to keep an eye on it. But I think we're doing the right thing, sitting on our hands, and probably until Tuesday or Wednesday next week, where I think the next big move in this market is going to be either a breakout or a breakdown of the, whatever we are in, this the doldrums. Let me put it that way. CMA, another stock, Comerica. This one, basically banging around $52. You got a big seller here. You had a big high that fell right off a cliff on July 16th of last year. Got into it again with a light volume, almost half the volume, September 19th. Turned right back into this. You got 2.2 million against that 3.7 million on June 10th. This thing's really starting to pull back into the trading range once again. Like I said, it's a lot of these stocks just not seeing that sign of strength. Domino's Pizza, as I used to call them, Domino's Death Dish. I guess they're better now. But basically we're going up against this big, huge day. Did have a little bit of pullback, didn't fill enough of this gap for me to buy it. But certainly it is back up here at these highs. A little pop up today with no volume, 160,000 shares against the 1.1 million shares on April 24th. You'd like this thing probably to come back about to 101, 102, mostly fill this gap, which I think it's probably going to do. And then if it's on light volume, this is probably a nice trader. Not a huge amount, maybe a 10% trading range to the upper side. Ellie Mae. And we're not talking the Clampetts. We're talking about a company that insures mortgage folk. It demands it's on-demand software solutions and services for residential mortgage industry in the United States. Its mortgage management solution offers a system of records that allows banks, credit unions, and mortgage lenders to originate and fund mortgages. I suspect that this is probably one of the better signals out here in this market. It did gap up on kind of surprise earnings with a 2.2 million shares on the 1st of May. We are certainly back up in that. Yesterday we had 372,000 shares. Today, 226,000. Am I expecting a flood of new mortgages? The answer is no. And my guess is that this thing is probably headed back. You've got two gaps. The only thing I dislike about shorting this thing right now, you've got two gaps that could qualify as the three-gap play. You get one more, maybe. In the meantime, hang on for Tom O'Brien, then Andy Heck. So when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
You're watching Tiger TV.